Hey, this is Andrew Faldy, and I'm going to give you an update on the Options and Systems workshop and what's going on there. So, we've been going over in the last few weeks a portfolio concept to market neutral options trading. This was a set of backtests that I shared at one point, and it was a series of trades. So there was 4 strategies inside of it. That's these 4, the first 4 colors down here, and then the average. And when we had looked through that, we realized and saw and discovered over time that working on these 4 different trades all yielded great returns, a little higher drawdowns than we usually like to see. But when we put them together, even though they're very similar, they're all market neutral, they all have very low starting net deltas, they are all on the SPX, they're all a very similar time to expiration. Even though all those things are similar, the risk-adjusted returns are significantly better by combining these 4 trades. Then we looked at a different set the next week where we put together just 2 trades, but we forced some more uncorrelation. Same deal though, it's the same index, market neutral style of trading, positive theta style of trading, negative vega, all across the board. We did have a different time to expiration, and we pushed them to have bearish management, bullish management, and a bullish and bearish starting position. So we're optimizing the trade plan for one to be best in a bull market, one to be better in a bear market. And what happened is, even if you were to merge the 2 rules and find a middle ground, that result's not nearly as good as if you have the management of each to be associated with bull and bear focus. So it's basically like putting 2 different traders on the SPX options chain, and one having a bullish bias and one having a bearish bias. If they're both great traders and they have a great trade plan, they should end profitably, but they're going to have a different experience from day to day and month to month, depending on what the market did. So this is putting them together with everything, not just the starting point, but also how you're going to exit the trade, where you're going to put the next trade on, etc., is all put together. So this week, that was last week and the week before, and this week I'm going to be sharing this most recent backtest. And this is one, let me bring this back and explain the difference. This is totally independent, 2 different independent plans that are run separately. So what can happen is sometimes one goes to kind of a neutral stance while the other one is back to directional, and that doesn't really create a neutral starting point. So this is one where I've put them in sync into a single trade plan, where if one exits, they both exit. But this is a little different. This is a little more aggressive on the bullish side and a very similar aggression on the bearish side, but ultimately a very neutral trade. Even though the bullish side is more aggressive, it's also smaller. So it's a very neutral starting point. It's a single entry, single exit, just like all of my trade plans at this point, going on a year and a half now. Is just enter and exit, no adjustments, no adding to size, no scaling in, no increasing capital size throughout the trade. It's all in or all out, simple trade plans. But the complexity comes into exactly what you're going to pick to get into and exactly what your exit rules are. But this is forcing 2 trades to be on at the same time and then exit at the same time, so that one doesn't become too directional while the other one gets back to a more neutral stance. The result was encouraging. This is a single year test. I had to do this one manually, so I only have 1 year. I do like to test 2016 when I'm testing out an idea for the first time, because that year has a lot of different circumstances in it. There's a heavy correction at the beginning, followed by a steep rally, a lot of chopping around, some implied volatility issues and skew issues related to pending election, surprise moves in the market in both directions, etc. So very good for a first-year test. This has, of every single entry, single exit set of rules, and this is completely rule-based. If I were to give you the rules, you would go and be able to test the same year, and unless you just round one strike up or down differently than me, you're going to see basically the same result. Completely rule-based. The risk-adjusted returns, as I measure it, as total, or the annual return divided by the drawdown, is the highest of any SPX trade I've ever worked on. Now this is only a single year, so if you add a bunch of other years, you're going to see other drawdowns, and that's going to probably bring it back to normal. But even on this more challenging year, had a very, very small drawdown that I was very happy to see. So 54% on the return and only a 1.5% drawdown during this 1 year backtest for 37 times drawdown. Now, you just increase that return or that drawdown just a little bit more. That it's like an exponential process of or return on the return on drawdown figure. So it'll come back down to earth at some point. If you test another year before, you got the flash crash just several months before this test even started. So I don't think this is the true expectancy of the trade, but it's a good starting point. But here's how the workshop goes. I do some of this work, or somebody gives me an idea and we work on it together. But typically I'll start the process, or I collaborate with somebody and start some research on an idea. And we test it and we make sure there's a good edge behind the concept in general. And then I share it in the workshop. And we do that every Wednesday afternoon at SMB online, that you can attend live. You can attend, and then it's called a workshop for a reason. We're doing work ahead of time. We do work continuously to study, reveal edges, find edges, refine and sharpen edges, and then we present them to the workshop group, and people will then take up the baton and go out into the rest of their week, and in the next week before we meet again, they'll do some similar work. And they have the freedom. There's no rules or anything about what you do, but you can pick up the baton and continue the work, share the information. I only produce 1 year of this. I'll give it to you. This is fantastic. I mean, this is really high performance stuff. And I'm just going to give it as part of the workshop membership to you to work on it, because it's a collaboration process. So somebody else will probably take this and finish backtesting through year to date. Somebody else might take it and go to the year before. Somebody might take it and make one little tweak that they think would add a lot of value. And we share that information with each other. So that's what we do in the workshop. It's the Options and Systems Workshop. So I hope you decide to join us. That'll be Wednesday, November 1st at 3 p.m. Eastern. We'll be talking about this trade, which is an unnamed trade. Just actually the only name I have for it is the test number. Test 14 or whatever it was, 1442 or something like that. So it's just kind of a test number, and I share it and we refine it, find what holes are left in it, find some improvements for it, find how to make it more robust and tradable. And there are people in the workshop that have taken things we've developed and are trading them live with significant capital. And this is something that we're able to do as a community. So hope to see you Wednesday, 3 p.m. Eastern. Talk to you then. Thanks.